There you go.
One of the things that really intrigued me was cost segregation. And we're talking about, 12, 13 years ago. I like the fact of being able to help people save money. And that's one of the things that really drew me to it. I always enjoy helping people. Based on the IRS code, what you can do is what's called straight line depreciation, where you take a look at the acquisition cost. So our recommendation is you always check with your tax advisor to see what your unique circumstances are. Work is an important aspect of my life, and to me, it's not work because I enjoy doing it so much.
Welcome to the Life by Design podcast. Today we get to interview Mark Gross. Not only is he a phenomenal human being, he is an amazing real estate investor and even a better cost segregation specialist. In this podcast, we're going to dive into his life, why he loves cost segregation, why he chose the field of cost segregation, and why you should know about it if you are a real estate entrepreneur or a real estate investor. Well, Mark, thank you for being on the show. Welcome. Welcome to the Life by Design podcast.
Well, thank you. I appreciate the opportunity. Good to be with you this morning.
Absolutely. Well, Mark, we met during a real estate Zoom call, and you are the absolute cost segregation specialist, right, in real estate. Tell me more about how you got to where you are. I mean, I'd like to learn a little bit more about your life and, where you started and where you are right now. Tell me more. Sure.
My background has been in business management. I was in manufacturing for a number of years, overseeing operations in several different manufacturing facilities. The last one I was at, it was a 1 million square foot plant in the one facility that I was there and also oversaw operations in some of the other plants as well. So my background has been in business and in management, and then I transitioned out of that. And I saw the opportunity in commercial real estate. And one of the things that really intrigued me was cost segregation. And we're talking about, 12, 13 years ago. So the company that I'm with is CSSI, and that's we've done over 30,000 studies over the last 20 years.
Wow. 30,000 studies. That's amazing. Before you were with CSSI and you were in operations, like you said, what type of operations were you doing?
Sure. I'm certified, Apex certified for supply chain management. So I oversaw production, inventory control, purchasing, traffic, things of that nature in the different facilities that I oversaw.
And have you always wanted to do that, or was it something? How did you get into it?
I started working for one company in inventory control, and then I saw this opportunity in a manufacturing company that was nearby. So I started with them, and I was involved in their implementation team on a software that they were installing for supply chain and other things. And I did that there for about 3 years, moved up the ranks, and then I saw that there was another larger company that was going to be installing the same software. So I transitioned to them, helped them with implementation, and then moved up in the management ranks there. Okay.
Now, at what point did you realize, hey, I like to get into cost segregation or even in real estate? How did that come about?
Well, real estate's always intrigued me. I mean, years ago, kind of by default, I had a property that I lived in, and then had another property that I had new construction built. Didn't sell my other one, so leased it out. So was a landlord kind of by accident. So that kind of intrigued me at first. And then just being involved in commercial real estate down the road, seeing how I like the fact of being able to help people save money. And that's one of the things that really drew me to it. I always enjoy helping people. And also the analytical work. I've enjoyed numbers. I enjoy that aspect of it.
Now, I tell people who are investors, limited partners, about cost segregation, about tax savings. But then I always have a hard time explaining to them how it actually works. And from in your point of view, you can do it in such an easy way and make people understand. in a overview, can you talk about, like, in real estate investing, what is a cost segregation study? And, then we can jump into the real estate professional and talk about that.
Sure. Based on the IRS code, what you can do is what's called straight line depreciation, where you take a look at the acquisition cost, subtract out the land because you can't depreciate the land, and that basis that you have then, for most property types, you depreciate it over 39 years, straight line depreciation. For residential properties, it'll be 27 and a half years. So you take the acquisition cost, subtract the land, and then depreciate it out over those number of years. Mm-hmm. The alternative method, which is in the IRS tax code also, is cost segregation. So rather than taking a look at the property, building it and the elements of it as one entity, what you do is you break up the components or segment it. That's where the word segmentation comes from cost segregation, so that you identify pieces and parts of the property that can be depreciated faster. So, for instance, you have carpeting. It's not going to last 27 and a half years or 39 years. That's considered to be a 5-year property. So what our study would do is identify, in that particular case, what's the value of the property that can be depreciated quicker. And, for instance, your parking lot's considered to be 15-year property, so that can be depreciated faster also.
Okay. Now, at what point, how does this benefit an investor? Like, why would they even want to know what a cost segregation study is, and why would they invest with someone who does cost segregation studies versus not doing it?
Sure, that's a great question. And the difference is, let's take a look at how you can benefit from that. Let's say that you have a net operating income of $100,000, and you have to pay taxes on that based on whatever your tax rate is. Right. Let's say our study were to create an additional depreciation of $100,000. So instead of paying taxes on the $100,000, you pay nothing. Mm-hmm.
Wow. So who wouldn't want that, right?
You're right. And the other thing you really need to think about too is that it depends upon your unique circumstances. You referenced something earlier regarding the real estate professional. Yes. Now, that's somebody who can take full advantage of this, whether they're a real estate professional themselves or maybe their spouse is a real estate professional, and you can actually offset, for instance, W-2 income. Wow. So our recommendation is you always check with your tax advisor to see what your unique circumstances are, because another situation is that with LP, limited partners, you're kind of limited if you don't have other properties or if you're not a real estate professional as to what you can do with those write-offs.
Okay. So if you weren't a real estate professional, then the cost segregation study, is it still beneficial for them to write off like their regular income from the passive?
It's not the regular income. It would be their income associated with that particular investment property, or if they owned other investment properties. So again, It kind of gets back to it depends. It's hard for me to put out there a blanket statement that would be applicable for everybody, because everybody's situation is unique, and I don't want to say anything that would mislead people as to what their situation what their unique situation might be.
Absolutely. No, and I wouldn't want to put you in that position either. So would you say it's fair that if people are investing in real estate, they should look at operators who will be doing a cost segregation study? That was one thing that once I learned about it, I would always ask, like, hey, like last year, 2020, I'll ask them, hey, are you doing a cost segregation study this year? Or are you waiting until next year? Right? Way more benefits that way. Is that right? That's
correct. The maximum benefits you're going to get is in the first year of acquisition for several reasons. One is that if you don't do it the first year, then what the CPA will do is straight line depreciation on it. So a certain part of the depreciation is going to take into effect through straight line. And what that's going to do is diminish the amount that you can do through cost segregation the following year. You can still do it. I've done a number of them, which have been, acquired in previous years, but the maximum benefits in the first year of ownership, and then you have bonus depreciation, which I can get into as well if you're interested.
Yeah, so that's a term I've heard multiple times, but never really understand it. What is the bonus depreciation?
Sure. Well, the bonus depreciation for new acquisitions came about at the end of 2017 as part of the Tax Cuts and Jobs Act. And what that meant is that with one of our studies, that anything which has a less than 20-year life, you can depreciate it 100% the first year that you own it. So, for instance, the scenario that I gave you before of the carpeting being a 5-year property, rather than depreciating that over 5 years, you can depreciate it 100% the first year you own it. And then with the parking lot, for instance, with 15-year property, you can depreciate that 100% the first year. Now, what you need to be aware of is the fact that it is starting to diminish the percentage. It was 100% was the last year in 2022. And it goes to 80% in 2023 with subsequent reductions of 20% a year until it goes away. However, we all know that this is very political in nature, and who knows what Washington, D.C. is going to do. We feel that it's going to come back in some form down the road, but stay tuned to see what happens.
Right. Now, you mentioned that the first year is the most beneficial. Say if someone closed the property on December 15th, right? How long does it take a study to get done? Can they still get it done before the end of the year?
Well, the study doesn't have to be completed before the end of the year. The acquisition needs to occur before the end of the year. You could actually have the acquisition close on December 31st and still be able to take advantage of that maximum depreciation. So the time that it takes to do the study is somewhere around 8 weeks plus or minus, depending upon the workload. We're incredibly busy right now with thousands of projects because of the upcoming tax season.
I see. Everyone's trying to get it in for what they purchased last year.
Correct.
Okay, so as long as they purchased or closed it on the 31st, and until they file taxes, they can come to you and say, Mark, I need a cost segregation study done for last year, and it'll still be okay.
That's correct. And with syndicators, they'll want to get the K-1s out to their investors in the February time period, February-March time period, and so they can file for the spring taxes. However, I have a number of clients that are not in that situation, and they can extend their taxes. So let's say you acquired something December 31st, and you want to extend your taxes. You can actually have that study done in the summer of 23, so that it gets completed in time for the fall filing.
Okay, that's pretty good to know. So you don't have to get it done by March. If you file for the extension, you could get it done in summer.
Correct, and that doesn't require any sort of amending of the tax return or anything like that. It's just extending your taxes, and it doesn't raise a red flag or anything with the IRS.
That's great. Now, you've been doing this for how long now, the cost segregation?
About 13 years.
About 13 years. And would you say that this is something that you've done longer than all the other positions that you've had?
I've been involved more in the management side of things than I have with this. So, but I've just been enjoying it.
Yeah. In the long run, do you see yourself doing this for a long time? And what is it that keeps you wanting to do this? Because then I know some people who get into this work and they're, they realize it's not for me. But for you, 13 years, you're in it for the long haul, right?
I am. You're right. Again, I enjoy helping people save money. I mean, who wouldn't want to deliver good news? I had a situation last week where I delivered a study for a client and saving them almost $1 million in taxes, them and their investors for one property. So it can be significant.
What is the biggest like percentage you've seen? Like, say someone purchased a property for 10 million, right? What's the biggest cost segregation that you've seen save people? I've heard some crazy numbers. I've heard 50, 60, and then some tell me, oh, it's in the 80s. I'm like, what, in the 80 percentile? Tell me more about that.
Yeah, one thing to keep in mind is that it's really going to vary depending upon the property type. Mm-hmm. And obviously it's going to vary depending upon what the cost of the property is, and then also what the land value is. You might look at some areas, maybe in Southern California, where in Manhattan, New York, where the land value is going to be significantly higher as a percentage of the acquisition cost. So right away, you need to take that off, subtract that from the acquisition, so that will diminish the effect. Also, it's going to vary depending upon your property type. I've done a number of industrial properties, such as warehouses, distribution, manufacturing, and it can be very beneficial there. However, you're going to have less deductions for that type of property than, let's say, you might have with a medical facility or multifamily or office, just because of the componentry. Because typically in industrial property, you'll have maybe like 80%, 20%, where 20% is office and the other is the industrial aspect of it. So you're going to have less there. There's others, however, like I mentioned before about the parking lot. There's some which have a huge parking area, and that can provide some significant savings as well. And then there's also the CapEx component to it. If you're planning on doing significant renovations on something, we can do an extra study which will identify what it is that you're doing there and be able to identify how you can maximize deductions and reduce your taxes for that.
So ideally, if you were to say an ideal property, what would be the location? What would be the asset class? And what's a percentage? Like, is it that 70, 80%? Is it more? I mean, I've heard someone says, oh yeah, we've done like over the 100% mark. And I was like, what? What would you say is the ideal if you could name like a location asset class?
You may not like the answer, but it depends.
Of course.
And because there's so many variables, I hate to really pick a particular one, because the other thing that you need to really be cognizant of is the investor, what their classification is. We touched upon real estate professional, limited partner, things of that nature. I quite honestly think that sometimes syndicators oversell what the cost segregation aspect is to it. Right. And even though that's something that we do that can benefit our clients, I've been asked by a potential client, what property type should I buy in order to maximize my cost segregation? And even though that's what I do, I say, I think you're looking at it the wrong way. I think you should look at what is my best investment overall. Looking at the return on ROI and, all the different aspects of investing in something. Then take a look at what is the cost segregation. That's just going to be the cream on the top that you're going to have. So I prefer that people look at the fundamentals of making a real estate investment as opposed to what are the cost segregation benefits, because that's just one aspect of it. It's kind of similar to what I've heard with opportunity zones. A opportunity zone won't make a bad deal good, but it'll make a good deal better. And the same applies, I think, for real estate. Okay,
so that's a great concept. Thank you for sharing that. Yeah. Now, you've been around real estate and real estate investors quite a bit. Would you mind sharing your personal experience in investing? What do you usually invest in yourself? What do you look at? What are some of the metrics that you go for?
Well, at this point in time, I'm looking more at LP opportunities just because I'm so busy with what I'm doing here and enjoying it. And I don't really have time to be more actively involved than that. So I'm looking at some LP opportunities, probably not in Illinois where I'm at, but maybe even though I'm Chicago-based, I do projects from Hawaii to Florida and probably more in Texas than any other state. So that's good. One which is really popular and I've done a lot of studies for recently are short-term rentals and maybe the Airbnb type. And what's phenomenal there is the savings that you can have. In fact, for the more recent projects I did in Hawaii, were short-term rentals.
So not only can people do it for industrial and multifamily, they can also do it for short-term rentals as well.
Yes, and for single-family rentals as well. The way I some people will say, well, what is a good idea? What's a good when is it best not to do a cost segregation? And the reason for that would be maybe I'm planning on flipping the property. If you're planning on buying it and selling it within a year or two or three, it may not be advantageous because there's something called a recapture tax. And what you want to do is hold the property for at least 3 to 5 years or longer in order to recoup the ROI you're going to get on the tax savings, offset whatever your recapture tax may be. So that's something you need to keep in mind. Another might be the dollar amount threshold. And it's a pretty low threshold, and for single family or things of that nature, would be $250,000 or greater, excluding the land value. And some people will say, well, my property's worth this, and say, well, that's immaterial what your property is worth. It's how much did you pay for it? Because the cost segregation is based on the acquisition cost, not the current value.
Oh, okay. Now let's just say, I'll use myself for an example, right? Say I purchased my home last year, and next year I want to use it as an Airbnb, right? Because I purchased it in 2021, and then I want to Airbnb it in 2024. How does that work in terms of the cost segregation study? And is it still beneficial?
Yes, you can transition into that. We would probably need to take a look at the specifics of your situation. Again, it depends. I hate to be nailed down on specifics on this particular one, but what we'd be happy to do is gather the information and give you a free preliminary analysis. And that's what we do for our clients. Because we've done tens of thousands of studies, we have a simple one-page PDF questionnaire, which they fill out information about their property. And then within 2 business days, we can provide that free preliminary analysis of a very conservative estimate of what their savings would be and the cost of the study, so they can make a determination as to whether or not it's worthwhile. And there's some pre-qualifying questions in there, such as what I referenced earlier about what's your hold period, how long are you planning on holding that property, and things of that nature.
Okay. So even though I purchased it a while back, it's still doable.
Yes. Yeah. And again, it depends. We need to look at how much it was paid for, what's the value of the land, and all those particular aspects of it. Because our objective isn't to sell studies if it's not meaningful, beneficial for our clients. We want to make sure that it's something they can take advantage of.
Absolutely. Absolutely. But then the biggest advantage is usually the first year they purchase the property.
With the bonus depreciation, yes.
Okay, with the bonus depreciation. That's awesome. Now, is there going back to your personal life, because you're so busy, you're attending so many conferences, right? You're everywhere, meetups and everything. Is there a time where you think, wow, I've done this for quite a while, I'm going to slow down, or are you ramping up? What's happening in your personal life?
I'm just enjoying what I'm doing. I'm playing less golf because I'm busy working, but I've always enjoyed working. So I like I like balance as well. I like balancing it out with family and also with recreation and working. But work is an important aspect of my life, and I just to me it's not work because I enjoy doing it so much.
No, I can definitely tell that you love doing it. There's no doubt about it. You wouldn't be out there talking to everyone and attending all these conferences and Zoom calls if you didn't love your work. So, and every time that I have watched you explain something to someone, you've done it with a lot of patience with it, and even including myself. So I really appreciate that.
You're welcome. That's what we do. And I'll add on to that, and that is, even though I've been doing this for a number of years, I love being stumped with things that I may not know. And occasionally something like that will happen. And what I love is the fact that we have, many people in our corporate office that I can just get on a conference call with the client and address that particular unique circumstance.
What is the number one thing, say last year, that you've been stumped on? If you would share a story.
Yeah, it had to do with someone who wanted to acquire a property in Florida, and they were looking at what the ownership structure would be of buying that property. They wanted to, the seller wanted to be part of the new acquisition team, and in that state that if you buy something and the original owner is still part of it, that has a positive impact of your real estate taxes not being increased and other taxation from that standpoint. So that was kind of outside the realm of what I typically work with. So I did call in one of our in-house people to have that conference call with them.
That's awesome. It's great to know that even though you've been doing it for so long, there's still new things out there, but it's even better to also know that you have a team behind you, backing you in what you do as well, right?
Yes.
Yeah. So Mark, as we close here, if people were wanting to learn more about cost segregation, and there's no doubt I would like them to reach out to you, what's the best way someone will connect with you?
Well, I'm on LinkedIn. I have over 9,000 connections there. Also, my phone number is 630-329-9801. And also my email is Mark Gross, that's MarkGross at costsegregationservices.com.
Awesome, Mark. Thank you so much for being on here. You provided a lot of value today. I'm sure people are going to get a lot out of it.
You're welcome. It's my pleasure.
Thank you. If you loved the podcast and you thought it was amazing, give it a thumbs up. Watch other videos here and here.